From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go.
Alrighty, folks, I think there are actually 4 things that we must talk about this Monday morning with Taylor, CEO of Life Goal Investments, a 10-plus year Wall Street veteran. First, unfortunately, the war has escalated. 9 days of strikes, loss of life, unfortunately, is growing. We do have hyperscalers starting to report this Wednesday. We also will get something in my wheelhouse, new home sales on Friday. But as I shared in my daily financial news from Monday, I believe OpenAI is destined to be a dumpster fire. I believe their go-to-market strategy that started out hot will actually turn out to be an Achilles heel. They are going to go to zero because there are better, faster, and cheaper models that the masses will start to use, most recently Kimi 3. Yes, it's a Chinese model, but I don't care if they have my mom's lasagna recipe. I don't care if they have my budget, blah, blah, blah. It just doesn't matter. It is estimated that over 50% of tokens being used are already being used by Chinese models. So I want to ask a Wall Street veteran, if I am right and OpenAI turns into a dumpster fire that burns hundreds of billions of dollars and ultimately goes to near zero or something less than today before getting acquired, I don't even know where to look. Where are we going to look for the signs of a dumpster fire? So, Taylor, I'm not asking you to agree with my opinion. I want you to highlight, Zuber, you would start to see the cracks here and here and here, and then we can get into whether you agree or not. But where would I find it?
Zuber, you have already started to see the cracks form.
Yes!
So a major, no, and I don't think you're wrong, to be clear. I think their go-to-market strategy was very flawed and continues to be very flawed. But a big owner of that is Microsoft. And Microsoft stock has not done particularly well this year. And a lot of that has to do with the fact that they have a stake in OpenAI that's valuation had run dramatically. And it was a huge tailwind for them. And now it's becoming a huge headwind for them. Because what you saw in Q1, and I said this last week, was you saw Anthropic post 8,000% revenue growth. 8,000% revenue growth in one single quarter. And so what's happened there is OpenAI has not figured out how to monetize the end consumer, which is whom they're after. Whereas Anthropic has said, we're going to take this B2B. And B2B actually has the checkbook and the wallet to back it if they can see the productivity. And so
and they are more likely to say, I don't want the Chinese to have my stuff, right? They have true IP, right?
Correct.
Which creates this moat for Anthropic, but go ahead.
Correct. And the U.S. government's not going to want our biggest and baddest companies utilizing Chinese models that are getting better and better and better. So the latest I heard over this past weekend from a very informed source is that the Chinese open software models that are not run on hard brute force compute horsepower that we're running our models on, so therefore they are way more efficient, are about 4 months behind our best at this juncture. And that gap continues to close. So OpenAI, they were the name. They were the name that initially launched into this space. They were the one that everybody utilized and everybody got comfortable with it, but they gave it out for free. And then they said, hey, we're going to put this in front of the masses. We're going to get the maximum usage out of this per person. And the reality is people aren't willing to pay even the $20 a month that they're requesting for it, even for the lower end models. I do, and I use it a lot. And where I use it for is simple tasks, but I also utilize it to, like in my social media work, to cut words, trim fat. So it's not that they are producing a script for me, but they are taking out the 50 excess words in a script. And it is very useful for that. But if it costs me from $20 to $40, I'm not doing it. And so like I actually have a very real use case, whereas most people I don't think do, and they're just not willing to pay for it. And I think you're going to see it show up. You've already seen it showing up in Microsoft. You've already seen it show up in Oracle. You've already seen it show up in a lot of this circular financing type organizations. And they're being taken out behind the woodshed right now.
Yeah, and again, I think it's really going to boil down to the go-to-market strategy, right? They came out hot. They were the name, right? They were the Xerox, the Google, whatever for the moment, right? They were the answer.
Mm-hmm.
But they went after the consumer at $20 a month, which again, out the gate, there's hundreds of millions of us, and lots of people like to be on the bleeding edge and will play with it for $20. But in order to kind of cross that chasm, you're just not going to get there, especially if the Chinese model, the last I read, is better. It's now Kimi 3 or whatever it's called, is the highest ranking LLM out there, faster and cheaper.
Yeah.
Better, faster, cheaper.
Is that good? Is that good?
I think that might be 3 for 3, right?
So we have a little conflicting data, but I'm not saying that your data is wrong and mine is right.
But even if they're 4 months behind, for the consumer, we don't need the bleeding edge.
Correct.
We probably don't even want the bleeding edge.
That's the reality. We don't know how to utilize it.
Exactly.
It's just, yeah. So no, you're spot on. And now what you're seeing is earnings forecasts not change, but get called down to the office and say, we're questioning what you're forecasting here. And that's what's taking place. And that's why you're seeing some of the memory type stuff sell off. That's why you're seeing the chip data kind of be very wonky. And the market is acting very unusually right now. And it's all a function of what we're talking about right here. It's all of a sudden, is China going to sneak in onto this game and just undercut the market because they have the ability to do it? They were crafty enough to do it via software, open source it, which we forced their hand to do that,
sure,
because we wouldn't ship them our chips and our powerful, underlying compute power. And so they got very crafty. And if they come in and undercut it, you're seeing big, mega cap stocks right now move 8%, 9% up and down within a day. That is not a normal market environment.
No, not at all. And again, it's funny. I'm glad I have the receipts. I think it was 6 months ago. I think I was actually 6 months ago proposing, like, hey, if I was China, what would I do? And I would execute, what was called steel dumping in the 80s.
Yeah.
Is I would just dump these LLMs and then blow up the debt market and just watch money burn. And that's where I think it's coming.
Well, what's funny is that when we first started to see all of this ridiculous CapEx, it was about a year ago. So a year ago, I think the number was 400 billion. And now it's 800 billion planned CapEx by the hyperscalers, which are numbers you really can't fathom all that.
They're going cash flow negative. That's how big it is.
They're going cash flow negative. But back when they were going to spend $400 billion, now they're $800 billion. The question at that point was, well, when does the productivity bleed through?
Where's the revenue?
Where's the revenue? Where's the money coming from here? Yeah. And that question has not been answered, but the market muted it and suppressed it. And it just stayed out of the headlines until right now.
Yeah. And again, I'm trying to, because again, this circular financing is a complete, it's just crazy how they let that stuff happen. But I'm wondering if OpenAI OpenAI has burned more capital than any company probably ever. They just have this insatiable desire for cash.
Yep.
And if I'm right, they're right now, I think they're tiered up to be the third IPO, right? Anthropic, it appears, will be next. And I think get in under the wire.
Correct.
I just don't think OpenAI gets to the finish line. And then I ask myself, what happens if they can't pay their bills? Do people go back and confiscate the GPUs or something? Is that collateral, or what happens?
It was a horse race. It was a horse race between Anthropic and OpenAI. And at first it looked like OpenAI was going to come first.
Yeah.
And then I think the market told them, you're not allowed to come to market until you can figure out how to make money. or at least, I mean, SpaceX isn't making money either, but at least show some sign, tell some story that we can actually wrap our head around. And that just hasn't come to fruition yet, which is why they said, you know what, maybe we'll do this in 2027. We got to get our shit together between now and then.
But I mean, I don't know that they can survive. Again, it near as I can tell, and I don't know if this is true or not, but I read a report over the weekend that they're still losing money for every customer that they acquire.
Yeah, that's not a great business model.
That's not a great business model.
You know what? It is. It is if you can. It is. We've seen it successfully run by other companies, but there was a line of sight. There was a story. There was a game plan and a business proposal that said, hey, we need to spend money to acquire this customer because the long-term value is X. but the long-term value isn't there if you can't convert them to pay $20 a month, let alone $100 a month, which is what it's going to take you to be profitable.
Yeah. And again, this is why the go-to-market of getting the masses, while genius and gets you out early, is going to prove to be the thing that kills them. Because again, better, faster, cheaper is always going to win.
Well, at the end of the day, it's like the first mover advantage typically really is a first mover disadvantage.
Correct.
Because you see exactly what folks did wrong, and then you come in with a superior game plan and you execute upon it. And look who is the king of the castle right now. The king of the castle right now is Apple, who said, I'm not getting involved in any of that nonsense.
Yeah, I'm not burning my cash.
To do with AI. and now they're the one that isn't spending. Like this earnings season, which I know we're going to go there. Yep. This earnings season is going to be incredibly.
Well, let's just jump to that. That was going to be topic number 2, but let's just jump to that since we're here. We'll hit the war after this. But yeah, the big tech earnings start next week. Let's hit the finance bros first. Again, they always come out as expected. I think we said last week they're going to be fine. They're going to have record numbers, this, that, the other. Anything shock you in the big banks?
Well, no, they were incredible, like we both said they were going to be. Yeah. But they had a positive movement out of the stocks after earnings, and then they gave it all right back. Like the two, Goldman and Morgan, had positive movements and then they gave it back. And it was just because nothing wrong with what they reported. They reported incredible earnings, and you knew it was going to come because you had record deals from obviously SpaceX coming to market, but you also have debt issuance coming from companies that they're brokering. You've got a lot of M&A starting to pick up, and that market becoming unfrozen. M&A, I think I said in the last one, up 50% versus the first 6 months of last year. So obviously that was all very, very productive. I think the market now says, like, okay, if everything is incumbent upon the success of AI, and now we're starting to question AI a little bit and the spending that's taking place there, where do the finance bros garner their next incremental dollar? Can they continue this fervor? And I think that's why they had a big win, because the numbers were so good and the market was like, yeah, but we knew the numbers were going to be good. And what's coming next? Because that's the real question.
I like it. Well, let's get to the hyperscalers. I think Google, AKA Alphabet, or Alphabet, AKA Google, goes out Wednesday.
Correct.
But we have a whole list of tech companies coming in the next 10 business days. What do you think's coming?
I don't know. So I think that they say that they continue the CapEx spend. I think the market has not talked them out of that yet.
So let me poke at that a little bit. Near as I can tell, the last several quarters, not only have they said they're continuing, but near as I can remember, they've increased it every quarter. So do you think the increase continues, like they do it again?
So that'll be interesting to see how the market takes that. So if they say, hey, we're going to continue on the trajectory that we were on, meaning like we're not increasing, does the market then bleed that into, oh boy, they were going like this with their forecast as to how much they're spending, and maybe they just level off. Is that kind of
could be the pin, right?
Yeah. So I don't know. I think that, these things come into and out of favor. Last week was a really rough week, kind of broadly speaking. You actually had the Magnificent Seven catch a bid where that you had stuff sell out of memory and some semi stuff, and it rotated over into the Magnificent Seven. And that was just because I think valuations were getting relatively compressed on that end, and people were buying the dip and rotating out of some of the more momentum stuff that was getting its face ripped off into the Mag Sevens. I don't know. I think that probably they continue to accelerate their spend. I don't think that this was a long enough period of time of punishment that allows them to about face on something that seems to be a pilgrimage to who is going to be the fastest, the biggest, the best cloud provider and have the most compute power. I still think that is the game plan.
All right. Well, it's interesting. Obviously, South Korea, I think you probably saw that last Thursday or Friday. Memory serves, they had 1.3 million accounts get margin calls, 350,000 estimated to go to zero or negative balances. What kind of leverage is in the U.S. system? Because those kind of numbers are wild in South Korea.
Yeah, you see margins expand every time the market continues to do well. So it's no big surprise that people are margins more than they have been. I don't think it's an uncontrollable amount of margin. You do have kind of like a confluence of three events playing out right now that I think the market's really struggling with. One is just relatively high valuations, and valuations, folks will make the argument, pundits will make the argument that valuations are fair right now. But what they aren't necessarily looking at as much as they should is the earnings growth rate. So basically, price to earnings is on a forward 12-month earnings forecast. And so with everyone saying that we're just going to continue to spend like drunken sailors on this AI build out, then the earnings forecasts are still really, really strong. You've got the next 5 years. This is shocking. The next 5 years, the average analyst has 23% earnings growth for a 5-year period of time.
For the index.
For the index, the S&P 500, the average estimate is that you're going to get 23% growth per annum, which basically means from today over the next 5 years, earnings are going to triple.
Yeah, I was going to say, I was just doing the rule of 72. It has to be oh my God, that's.
Yeah. So if
has that ever happened before?
It has happened. It came right to be clear, it happened once and it came right after the Great Depression.
Oh.
So it doesn't count. So let me just tell you.
It doesn't count. That doesn't count.
The answer to that is actually no. Yes, but absolutely no.
Yeah, absolutely no.
So if you look at it on that basis, then you can look at it and say, okay, fair valuation. So I'm going to go back to my overvalued comment. So, or at least richly valued. Yeah. You've got richly valued. You've got kind of the retail consumer sentiment getting frothy, if not very frothy. And then you also have equity issuance for the first time in a very long time. So we went from everyone's buying back to now Google, who has more free cash flow than God, issuing debt and equity. And it's like, well, hold on. Why are they doing this? Why don't they have the confidence in it to deploy their own capital into this? Why are they going out and borrowing money or raising equity to bring in new capital, dilute their shareholders? 2026 feels a lot like 2021. 2021, you're coming out of COVID. It was the year after COVID. You start to have this insatiable demand pick up for stocks. You've got rich valuations. You've got the retail trading army that's backing the likes of GameStop, et cetera. And then you also had significant issuance. And so 2021 was a banner year. Let me remind folks, like I think the market was up 25% or something like that. But then came 2022 and it was kind of the time of reckoning there. Yeah. So I'm not saying it's a perfect corollary there, but there are some similarities to 2021. And by the end of 2021, the market peaked. The market peaked, I think, literally December 31st, and then started to drift downwards.
Okay. All right. Well, let's get to this war. Unfortunately, this is something that's been topic for far too long, and unfortunately will be a topic probably for far too long. Yeah. But we've had some major escalations, right? There was unfortunately the death of 3 American soldiers, which caused President Trump to now have 9 days of bombing. This does not seem to be going in the right direction. Of course, it's Monday, and of course, that just means there's a headline about peace talks, which is just complete nonsense at this point.
Yep.
But this thing does not seem to be going in a positive direction, in my opinion.
No, it doesn't. I'm hoping that there is a timeline on the Iranians' calendar that they're looking at and going, hey, midterm date. Let's just push them to midterm date. Get this guy out or this guy's respective party out of control and then replace it in. And I'm hoping that's what it is, because I hate to say it, but that feels like a good scenario at this juncture.
Yeah, exactly. That's like an okay outcome. And that just means, that's 4 more months of this nonsense.
I don't claim to be any military strategist or anything like that. By far, nowhere even.
No, that's not my wheelhouse.
I'm speaking out of turn there, but I did listen to a couple podcasts this weekend with military strategists. And both of them said, and they were clearly very educated on the topic, that they don't see that we can get out of this without boots on the ground, which is it's something that nobody wants to hear.
That's the red line that I've had since the very beginning, is boots on the ground, forever war. Again, I have believed since the very beginning that Iran's willing to suffer more than we are, and that's a very dangerous. And by the way, we shouldn't forget that there's a third party involved, Israel, who could do their own wild left hand, strikes. And now we got Hezbollah coming on in the Suez Canal, and I read over the weekend there was a bombing of a distillation plant, right, or desalination, whatever it's called. It's like, guys, we start taking out infrastructure. This is
and you have a tanker on fire out there right now,
Oh my
or
goodness.
just had a tanker on fire out there off the shore of Oman. So, I mean, everyone's tactic in the shipping lanes have been just hug Oman and stay as far away from Iran as you can. And the latest headline that I saw there was, hasn't been confirmed who did it. I'm like, well, I think I got a pretty good idea here.
Yeah, it's not a hard guess.
So, at the end of the day, but I thought when that happened, not necessarily the markets have become completely numb, completely numb.
Yeah. Oil's over $80 now. I mean, they're just
So, but I would have thought that as soon as you start to see a ship on fire, where now there's real action rather than saying, hey, if something happens here, we're going to start doing this. And you start seeing real action there. I would have thought you got higher rally out of oil than you did. And I told you my theory on oil last week, that China is really the controller of global oil prices by their strategic petroleum reserve. They will buy at 65. They'll cut off all buying at 100, and they're just going to keep it in that window. So maybe some of that's going on there. But I would have thought the reaction would be significantly more given this weekend's headlines, given the death of Americans. Americans don't like seeing American soldiers die, especially when they feel it's unnecessary or not necessarily 100% at the hands of our own decision making, which I know is a big argument about the Israelis right now, et cetera. So, but the market isn't reacting. It's pretty well muted.
I got to tell you, I thought oil would have a more aggressive move this morning. I really did.
Yeah.
And to see it was actually down, at least at the open, at least a little bit. I don't know what it's doing now, but yeah, this does not seem to get better. I am tired of all the bad shit happens on, Friday to Sunday. And then suddenly, peace talks happen Monday. I'm like, God, get a new playbook. This is
well, what is the theory? The market's not open over the weekend, so it can't just puke on itself when
something
happens immediately. But that is absolutely the playbook. There's no,
you can't argue.
You can do it 3 times in a row and make, a coincidental kind of thought out of it.
Not 27.
Right. Exactly right. Exactly right. And it's frustrating that we have to continue to talk about this. It's more frustrating that we have to lose lives over it. I think the total is now at 17, which is becoming a non-negligible number. And not one is non-negligible, right? So don't let me come off callous there.
Yeah, no, it's 7. Yeah, that's not good. One's not good, especially for anyways. Well, let's get to the third topic, because again, you still have an economy to deal with, and housing is 12.5%, 13% of the economy. We've got new home sales on Friday. Any thoughts on what might be happening on Friday?
No, I want your thoughts.
Again, I think the first thing, let's talk big picture. New home prices are now at the median below existing home sales by about 20 grand.
Yeah.
Right. So significant. That's not normal.
No, it's not.
People should be asking, well, why is that happening? Well, I can tell you why. In the existing home market, we do not have a distressed seller, right? Most sellers are, even if they want to move because they're outgrowing their home, they don't have to. It's paid off. They have a 2% mortgage. They're uncomfortable, but fine, right? The cost of shelter is below, historical norms. So they're fine. Yep. They're just not a distressed seller. Home builders, they are forced sellers. At some point, home builders need to convert their build to cash to just reliquify the system.
Yep.
So that's what you're seeing right now. So I still expect new home sales to disappoint, right? They're going to have to keep increasing their buy downs or giveaways. Their margins are going to be hit. They're still positive. They're still, I think, single digits. They're not double digits anymore, but they're still single digits. And I think more and more builders are going to build to order versus build on spec. So we're just going to continue to see the slow, right? Housing's going to stay in a depression, simply said. Housing's in a depression.
And I was just pulling up looked like I wasn't paying attention there for a second. I was just pulling up the home builders index, and it had a really, really nice rally with just the risk on rally that started back kind of mid-May. Yeah. And it's given back 15% of that rally in the last 2 weeks or something like that. Are you still seeing big buy downs out of the builders at this point? Yeah,
I think they were, again, if you go back to the previous several months or quarters, they were starting to wane off of those.
Yeah.
I just think over the last 30 or 60 days, because rates are up. I mean, rates are very close to where they were last year.
At year highs. Yeah.
Yeah. So year highs. So I'm going to guess they had to, reverse that trend and go deeper to move product.
It's interesting that if you're getting a discount on new homes, it's interesting that the top end of the K that has all the money, it's interesting that they don't step in and level that out, where they step in and say, hey, who cares if it's 6.5% interest rates at this point? Like, we can afford it. We'll buy it in cash and at least bring that market to parity, because, like, call me crazy, but a house that's 15 years old probably shouldn't be quite as expensive as a house that's brand new. But right now it's the exact opposite. So I think there's something, obviously no one wants to wait a year for a house to be built. And building a house is, I've never done it before. My brother's in the process right now. It's not easy.
Yeah, it's horrible.
But at the same time, you also walk into something that is perfect, or at least what you perceived perfect to be going into it, et cetera. So has that ever, maybe you know this, maybe you don't, has that ever been the case where there's been this much disparity in?
No. This is, at least in the last 40 years, this is not normal. This is very unusual. And again, it's all because of the shelter costs. We have a whole generation of homeowners who took advantage of that window of COVID.
Yeah.
Who locked in shelter at you want to know why consumer spending is still good? Because we have a whole collection of people with artificially low shelter levels, right? There are people paying $1,200 a month that probably should be paying $2,400 under normal circumstances. So that means they got $1,200 to deploy on Netflix and, Uber Eats.
We don't know how good we have it. Ask a Canadian how good we have it.
Oh, I know. The resets every 5 years. Oof.
Yeah, it's like a commercial loan here in the States.
Exactly. So yeah, the 30-year gift just keeps on giving. That as time goes by, that will wear off, because you will have that second kid, that third kid. You will have a job transfer that's 20 miles further than you were before. You will have death and divorce. So this sticky shelter cost, the longer time goes by, the less sticky or inelastic it'll be.
Right.
But it's got years to play.
I actually see this like opportunistically. If you're someone who has the thought that, hey, I would love a new house, and you're on the top end of the K, it's probably a good time to buy.
Oh, I did.
Probably a good time to start building.
No, I did buy a new home. I bought a new home from a builder. I got a rate buy down. When I bought, rates were 8. I got a 4.99 fixed for 30 years. In the market I chose, they have these things called lot premiums. The lot that I have is a view lot. It was over 6 figures. I got it for 0. I got all the upgrades I wanted for 0. And
this is in Vegas?
This is in Vegas, yeah.
Yeah,
and I got $145,000 off list price.
You took them to the cleaners.
Of course I did.
Well, that was in the buy box. I knew what I was buying.
Yeah, of course. Yeah. So again, you're absolutely right. If I am in the K, the top end of the K, you should go nuts. You should go hard. Again, I got more than 10% off, 0 lot premium, 0 upgrades. And the beauty is I got a 4.99 30-year fixed rate mortgage.
So all in, what do you perceive? I mean, you can literally do the math. I don't know if you have.
I have.
All in, are you at a 30% discount to what you would have bought?
I think all in, I had to do a little guesstimate on the buy down they had to do. I think the buy down was 5.5 points they had to do.
Yeah.
So right now I think we got about $280,000 off. So it's about 30%. Yeah.
That's incredible. That's incredible. I don't think so. Like my market, to be clear,
you're the Northeast. No, that market's different.
Clear, I don't think that those deals are here, because we've got a couple new builds going in our community, and they bought a lot, and the build is getting built for them. I don't think anyone's really speccing here very hard. I don't live in the biggest town in the world. There's 30,000 people where we live in the town. It's a nice town. It's a relatively affluent town, but it's in the Northeast, and inventory is low everywhere, and the builds are still being bought.
Yeah. Well, we haven't talked recession in a while. I'm going to guess you think the odds of a recession in 2026 are damn near 0 at this point.
Yeah. I just don't think you can get a reversal on CapEx quick enough to have that happen. And that CapEx is what's causing the world to turn right now.
I agree. Let's talk rates. I think the 10-year is up this morning again. I think it's at 4.55 or 4.56. Do you think this, if the war goes the wrong way, and do you think we could see 4.8? We could see 5 on the 10-year.
We've been in a range, And I just
if you zoom out, it's pretty flat.
Unless some exogenous what's going on in Iran right now, like it's bad. Like it's bad. And so if that can't shake it out, and that was a big driver of it once upon a time, then it's got to be inflation shaking it out, or economic deterioration. We just talked about the fact that we don't see economic deterioration playing out.
Yep.
Inflation seems to be drifting downward, right? We got an impulse, and some of it was war driven, some of it was some outside CapEx type stuff driven. But you're starting to see a reprieve on that front, which should be the cap on rates. And if the war can't be the exogenous event that, hey, all of a sudden now, like real people are talking about putting boots on the ground. And I don't mean real people being people out of DC, meaning the military strategists say we can't be successful unless we put boots on the ground. Maybe that.
That's I think if boots land on the ground, that's a red line to reevaluate, and that's always been my fear, that we have to go there.
Yeah. And God forbid. I mean, no, it's that. I'm about to go down a political rabbit hole. Just stay right out of it.
Stay out of it. All right. Well, again, folks aren't following you. They have to. Life Goal Investments, Instagram and TikTok. I still don't know how you create 5 minutes of value in 60 seconds, but you do it day in and day out. Give us your closing thoughts and wrap us up.
Yeah, no, I think that this week I'm fortunate. I'm going down to do some content from the floor of the New York Stock Exchange on
very cool.
Wednesday, I believe it is. So you'll see me running around there like a knucklehead. But no, I appreciate the heck out of you and everything you do, and enjoy the heck out of our time, and appreciate you brought me on here before I had any followers. So means a lot.
There you go. Take care, man. Have a good day.
Thanks so much. Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
Information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.